Here's the expanded beginner trading lesson. Welcome to our advanced Candlestick Masterclass. In our previous lesson, we covered the basics of candlestick patterns, but today we're going to take it to the next level and explore why candlestick patterns fail without trend and level context. Have you ever been excited to trade a particular candlestick pattern, only to see it fail spectacularly? You're not alone. Beginners often make a common mistake that can lead to frustrating losses. They focus on the candlestick pattern itself, ignoring the broader market conditions. Let's call this the pattern-centric approach to trading. The problem with this approach is that it's like trying to drive a car without checking the road signs or speed limit. You might think you know where you're going, but you're actually just guessing. In the world of trading, the road signs are the current trends and levels, and if you ignore them, you'll be making uninformed decisions. Candlestick patterns are like maps that help us navigate the markets, but they are only meaningful in the context of the current trends and levels. Think of it like road signs on a highway. You know the speed limit and road conditions by checking the signs, but without context, you might not understand what they mean. Let's use an example to illustrate this concept. Imagine we're looking at a chart of a stock trading in a clear uptrend, and we see a hammer candlestick pattern at $50. The hammer is a bullish reversal pattern, which might tempt us to buy. But if we also note that the trend is strong, and the price is above key support levels, our confidence in the trade increases. In this scenario, we're considering the trend and level context, which makes the candlestick pattern more reliable. Now, let's change the scenario. The same hammer pattern forms at $40, but the trend is weak and the price is hovering near resistance levels. In this case, our risk assessment of the trade is different, and we might want to approach with caution. We can see that the candlestick pattern is trying to signal a reversal, but the weak trend and resistance levels make us question the trade. Another common mistake beginners make is ignoring the level context. They focus only on the trend and the candlestick pattern, but forget to check the key levels. This can lead to losses when the price breaks through a crucial level and the trade doesn't go in their favor. For example, imagine we're trading a stock with a strong uptrend, and we see a hammer pattern forming at $55. However, we also notice that the price is approaching a critical resistance level at $60. In this case, if we ignore the level context and buy the stock based solely on the uptrend and candlestick pattern, we might be in for a surprise when the price breaks through the resistance level and begins to decline. So, how can we avoid these common mistakes and make more informed trading decisions? The answer is to always consider the trend and level context when evaluating candlestick patterns. Here are some key takeaways to keep in mind. Always consider multiple tools, including candlestick patterns, trends, and levels, to develop a well-rounded trading strategy. Practical exercise. For your homework exercise, find a stock chart that displays a clear uptrend and a hammer candlestick pattern forming at a critical support level. Write down the stock name, the price of the stock, and the exact levels of the trend and pattern. Now, ask yourself these questions. Take your time to think about the answers to these questions, and remember to always consider multiple tools to make informed trading decisions. Recap: in this lesson, we explored why candlestick patterns fail without trend and level context. By considering the broader market conditions, we can evaluate the meaning of candlestick patterns more effectively. Remember to take your time and practice using multiple tools, including candlestick patterns, trends, and levels, to develop a well-rounded trading strategy. Join us for the next lesson, where we'll be discussing more advanced candlestick patterns, such as the morning star and the evening star. If you found this lesson helpful, consider subscribing to our channel. We'll keep you updated on the latest trading insights and strategies. and provide you with advanced candlestick masterclasses like this one.